Hello, mic test, mic test. All right, we're live. Um, right. So today is another standard lesson, right? Um, I try to fit in two questions in today because it's pretty short questions, right? Um, the main, the main gist of it is really just accounting concepts, accounting principles, and theories. Important things to keep note, but um how do I say? It's more prominent when you apply it. So just saying it out loud doesn't really mean too much, but at lower levels, it is. Well, apparently they want you to memorize this sort of thing. So uh, let's just learn it together. I have my own understanding because that's how I can't memorize. So I just explain in my own words instead. So I'll probably just lose the mark in actual exams, but it is how it is, eh? Right. And well, we still have some time before uh everything actually starts. Um but let's just do a brief introduction of the channel, right? So if you happen to stumble upon this video, welcome. I hope you have a nice stay here if you like seeing what you see. Uh Usually what I do is, go through accounting questions. Usually for more beginner level um education stuff. Um, However, I think in sometime in the future, maybe in the next like 1 to 2 months, I may start study with me kind of streams as well. Because yeah, this is mainly just I have an excuse to study. Yeah. Um, but yeah, maybe you can look forward to that as well. I will still hold regular lessons, just not on Wednesday nights. So I probably might shift it to maybe Monday night and Friday night. That could work for my schedule if all goes well. Right, I'll let you guys know soon when everything is settled. But for now, at least up to sometime in August, uh, it will be Wednesday night, Friday night, 12 p.m. UTC streams. Sometimes after the stream, I will actually play some games. So if you want to watch, gaming streams, those will not be saved as a proper VOD, by the way. So actually, no, it'll just be found in a different playlist. Yeah, it will still be on my main channel. Just you have to dig a little deeper to find them. Yes. Other than that, yeah. Gaming streams are always quite fun for me. But again, the main content would just be educational, right? And yeah, if you like seeing what you see, again, feel free to stay. There's no need to subscribe or follow, really. It's okay. Um, what else do I need to say? All right. Yeah, so if you guys don't get any explanation that I said on stream or in the VOD, feel free to voice it out. I understand that everyone learns differently, and if this explanation doesn't work for you, I'll try to find something that will, right? My goal is just to, share a little more about how I learned accounting, as back then when I knew nothing about it and was struggling for my life, right? So it's a bit of sharing of how I understand accounting and also a bit of teaching, right? So that you guys get the accounting concepts, whether or not you're a student or you're working out there as a accountant without you know a degree or diploma, it's fine. I think if you're clerk doubling as an accountant, oh, I can only say bless you. Good luck surviving out there. Uh, it's a tough life for that. Yes, and so yeah, I hope to help you guys out a bit, right? Teaching you some principles, also teaching you how you can apply it in your real world. So if you don't understand anything, feel free to voice it out. I'll try to find something that works. If you don't mind and you're allowed, you can add a bit of context. Maybe like what do you do? Are you a student? Are you working? Right? But just don't break your own confidentiality, right? That is very important. So yeah, it's just to tailor the explanation to suit you guys more. All right, so that out of the way, I'm try and see if my friend is online. Give me a second. I'll go silent for like maybe 2 minutes while I set this up. So please bear with me here. All right, I'm back. Yes, so today my student is a bit sick, so he's not gonna be joining in terms of audio, but he will be listening in. So wait, let me just share this stream with him first. Right? Okay. Uh right, so today we're gonna skip one question ahead. It's a yeah, so it's less prompting him for for answers. It's more of me just talking. So let's just start. If I could get the border out. There we go. All right. So yes, we are going ahead with question 4 first instead of question 2 and 3, right? Um oh, okay. Right, so let's just take a look at the question, right? Um so essentially C sells goods on credit to D, right? And they exchange invoice, check, and a credit note, right? Okay, and then copy the table. I'm not gonna copy it. I'm just gonna write on this instead, because I don't want to waste too much time. Okay, account to be debited. Uh, okay, so let's go through the invoice one first. So what is an invoice? Invoice is issued when a vendor sells something to you, or if you sell something to a customer. So if a vendor sells something to you, you're receiving an invoice. And if you're selling something to a customer, you are sending out an invoice, right? So let's look at this, right? So C sells goods to D, right? So in C's book, um, C is the one issuing the invoice to D, right? So what happens when you issue an invoice? It just means, hey, I have you know, I have committed to this um contract, I would say. Uh, and you would exchange money for my goods. So I'll receive cash or receive in this case it's probably not cash. Yeah, because it's on credit, right? So I'll receive a guarantee that you'll pay me in the future, right? And I will give you my goods. That's what invoice kind of means, right? It's essentially just a kind of more formal document stating exactly what is being exchanged here. So what are the goods, the quantity, the description, any information that the buyer would need, and also for the seller, how much the buyer will be paying for each item. This will include unit cost, right? The cost of each unit, the total cost, any GST or VAT, just tax, um, this sort of things. Usually, invoices will have something we call an invoice number. So it's a unique identifier for each company. Uh, and yeah, there'll only be one transaction per number, right? There will be an invoice date, right? Sometimes you can use that as a gauge of when the sale actually occurred. We'll learn more about when to recognize the revenue sometime in the future because that is more advanced. So for now, you can take it that the invoice date is essentially the date of sale, right? When you recognize the sale. For now, at a beginner level, I think it's okay. Yeah. Um. Right. So we have explained what invoice is, right? So let's just look at it, right? Account to be debited. Dorothy, what does that mean? That is actually your trade receivables. Because C sold items to D in exchange for, the promise to be paid back in the future, right? So Dorothy is considered under, trade receivables. Uh, or we can call them a trade debtor because they owe you money, debtor, right? Uh, account to be credited, sales revenue. You just recognize the sale had occurred, right? And then account to be debited for Dorothy. Um, Dorothy received inventory from C, right? Chijun. So that's what they mean by when you debit inventory, because you need your inventory number to reflect the addition. So you debit it to increase it, right? And account to be credited, you credit C. In this case, C is part of trade payables because you have to pay him back in the future, right? And yeah, in the future you pay them in cash, or in this case, pay them in check. So let's move on to the second item, which is check. This is very outdated nowadays. Barely anyone uses check. Not in the place where I am actually. They're ruling it out by 2027. So well, right. But for those of you who don't know what a check is, essentially it's just a piece of paper that you write down the bank account, your own bank account, and then you write down the amount, right? So and then you pass it to someone else, and that person can give it to their own bank, and that bank will do the transaction for you. So they'll reach out to the wherever that bank account that you written down is and say, hey, there is this request to pay me, right? So that's how it works. It essentially functions like cash, but it has a very big risk when you use it. So what happens in the past is people use those erasable pen, right? Those that have a rubber you know back. You just erase out the pen, the ink, and they just replace it with like their own bank account or whatever, right? That that has happened before, and that is a huge issue. I think that's why people are ruling it out, right? Come to think of it, I think my explanation of check isn't very accurate, but just know that it's being ruled out for this very specific reason. It's too easy to commit fraud, right? So okay, just take it that check is represents a transfer of cash essentially, right? We'll learn more about this in the future, when we talk about cash itself, right? But for now, you can just take it at that it is cash. Okay, so what happens when C receive the check, right? Essentially C gets money. So account to be debited, you can either say cash, you can add on at bank, because yeah, usually you will immediately deposit the check, so you get the money in the bank first, right? Cash at bank. And then what happens? Well, in this case, right, C was paid by D. D fulfilled the promise to pay, right? So you just say, yeah, D fulfilled their promise, so we're gonna remove that from the books. Just say, oh yeah, D, you don't owe me anymore, right? So this is what this means when you credit a uh, trade debtor, trade receivable, right? It just means, yes, this person has paid me back. Or the other transaction would be, this person can never pay me back. Therefore, I won't even bother waiting for him to pay money back to me. So that's two cases where you do credit on the trade receivables. Two most common cases, right? Okay, and then we have books of Dorothy's business. So I mean, when you write a check, right, it means that you're committed to pay, right? And you've once you give out the check, essentially it is money leaving your hands. So cash at bank, credit to reflect the decrease in cash. All right. And then since D is the one owing the money, right? And D pays C. So essentially what that means is D says, yeah, I have paid you. So I won't, I don't owe you anything anymore. So what is that? Well, how do we reflect that, right? We just debit trade payables, right? Or trade creditor. Usually you just say trade payables. Or supplier, right? So yeah, that is what check means, or for both sides, right? The last one is interesting. Credit note. Credit note can mean a few things, but in this case, it is actually there are two answers to this. Let's just go through both, right? One would just be offsetting. So what do I mean by that? Say in this case, right, C sold to D, but what if in the past D sold to C as well, right? So now you have they both owe each other money essentially, right? And a credit note is just to say, oh yeah, you can use what I owe you before to offset what you owe me now, right? That could be one reason for using a credit note. The other one would be saying more likely a refund kind of transaction. So it's like maybe D finds a good that is spoiled or something, right? And say, hey, can you take this back and give me a refund? I don't need the extra item, right? So that could be another reason. So I'm not exactly sure why it is. Let me see if there's an answer for this. I don't have it. So okay, let's just go with the more common one, which is the refund one. Okay. So what happens when you have a credit note here? Well, firstly, you have to think from the perspective, right? If you have a refund, um, it just means that part of the sale has never occurred, right? You return the goods, they return you the money, right? So what this means would just be for C, it just means that you have lesser things to receive, right? Because you took back the goods from them and pretended that that part of the sale didn't occur. And then, well, the same thing, right? Because the sale didn't occur, you gotta reverse the sales as well to reflect the actual decrease in sale. It could be sales revenue, it could also be sales returns, right? So it depends on what the examiner is asking for, right? Um, and what to be debited, right? Well, it's the same thing, right? Because if you pretend that the sale never occurred, then you return the goods shown by the credit on inventory. You credit inventory to show that you've returned the goods, and then you tell C, hey, I return you the goods. I don't owe you this part of the sale anymore, right? And that's what this means. So I'm not sure if this is correct, but I'll just go on with whatever I have right now. Hopefully you guys can still see. Okay, right. So that is A done. Let's go to B. Right. So explain the difference between a cash transaction and a credit transaction. Well, the simplest way to put it is in a cash transaction, actual cash was exchanged, right? Cash was being actively passed from one person to the other, physically, literally, right? So, well, I'm not gonna write it down. Actually, you know what? Sure, I'm just gonna draw it out. Cash is being passed to another person, right? Uh, okay, this is not great drawing, but yeah. So this is what this means, right? Cash transaction. What about a credit transaction? Uh, Instead of an actual cash, you just give them a promise, right? I promise you that I will return you your money. That is what a credit transaction means. And both are as important in the real world. Why? Well, cash transaction is obviously good because, well, the person selling you the item would be guaranteed the money because they'll receive it instantly, right? And the person paying, well, they don't have to worry about, uh, keeping track of how much money they need to, pay others, right? Because they already paid. So that's the good thing about cash transaction. The downside of cash transaction is if you only do cash transaction, you will need a lot of cash on hand, right? And having too much cash on hand just means it's being wasted. Why? If you look at the bank interest, even if you keep it in the bank, right, your interest rate is probably like less than 1%, some point something percent, right? And that is just not good because if you think about the yearly inflation, in good times maybe 1 to 2%, right? That means your money is losing value by 1 to 2% every year, approximately. So that is bad, right? If you keep holding on to cash, to just keep losing value, right? You would rather use that cash in investing, buying bonds, safe bonds, of course, buying treasury bills, right? Things that will pay out more than inflation just to keep, you know, just to keep their value there, right? And keeping it on hand is even worse because there is no interest, right? You don't earn anything from keeping money on hand only, right? So this is why cash transaction is kind of bad. It's not efficient use of money, essentially. Right, so this is why most companies would prefer credit transaction, where they just give you a promise, say, "Hi, I will pay you back within a month," right? And then you honor that promise so that you can keep doing the business, right? So essentially that's what it means, and that is good for companies. Why? Mainly for the buyer, right? The seller will have to actually keep track and keep like asking the buyer to pay up, right? But for the buyer, they get leeway, right? They get to spend their current cash on something more important, and then they'll pay back in the future, right? And usually, these sales and purchases on credit, they don't have interest. They're interest free for the maybe 1 month, depending on companies, of course. But yeah, this sort of business is built on trust, right? And of course, if you always pay up on time, then people are more willing to sell to you, right? So there is incentive to actually pay on time, okay? Right? Other than the interest. So yeah, that is cash and credit transaction explained, right? And also why people do it, right? So yeah, I tend to go beyond what the question asks of me because I think it's important to know the real world application of it, right? Okay. So question C. Give two reasons why a check may be dishonored by the bank. So what does this mean? It just means that if you give the check to the bank says, hey, wait a minute, uh, something went wrong, you won't get your cash. Right, so this is what they call a bounced check or dishonored check. Not sure what the exact term is, but essentially just means it got rejected by the bank, right? One reason would be uh not enough money. Very simple. If you don't have enough money in your account to pay, even if you give out a check, the bank wouldn't just like give out the extra money for free, right? So they'll just reject the transaction, right? Uh, well, the second reason could just be that you wrote something wrong. Uh, just a typo. Yeah, so you wrote something wrong, maybe a missing digit here, like in your bank account, right? Yeah, maybe a missing digit or like something. Yes, a lot of reasons why things could go wrong, right? These are the two more common errors that were made. And yeah, that is part C. Okay, let's go to part D. Right. So, we given more information. So on 2nd July 2018, C sold goods on credit to D. Okay, C sold again. List price was $1,000. Allowed trade discount of 5%. Cash discount was given when Dorothy settled on this day. Okay, so what does each of this mean? Okay. Um so firstly, trade discount of 5%. That just means to promote the sale, you give them a discount. What does this mean to accountants? It just means that you earn lesser revenue. Actually, right. The reasoning is a bit more complex. We shall go through it when we come to the revenue section, when we learn more about it. But just for now, just need to know that trade discount, it just means a promotion and you record the sales revenue as whatever you like after the discount amount, right? So let's just do this real quick, cause okay, it's on credit, so you debit a trade receivable because no cash was exchanged. Therefore, you just gave him a promise, right? So D gave a promise to C saying, I will pay you back soon. Maybe, probably, right? So Dorothy. Usually I'll write like debtor beside it to actually make it very clear what this is, right? It might be even better if you just say trade debtor, but during the exam, again, you might not have time to do it, right? And then what you credit is you credit sales revenue because you made a sale, right? You gotta record it somehow, right? You gotta say, hey, I made a sale, yippee. All right, so the working would be $1,000 times 1 minus 5%, which is 95%, right? So it's $950 and 950, right? Let me just double check my calculation because my brain isn't working too well right now. Yeah, 950. All right. Um. Okay. So that is the first part, right? What about the second part? Okay. So this is not exactly part of the question, but this is just to illustrate what happens, right? Okay. So cash discount was given. What does this mean? Usually to encourage your customers to pay you sooner, you give them a discount. So if I'm not wrong, there is a convention for it. It's like 2 by 15 or 2 by 10, like two. Let me just write it out. Something like 210 or like 515, things like this. So how do you read this? The first one is the percentage of discount. The second one is the within the number of days. So within 10 days of receiving their invoice, whatnot, right? If you pay within the 10 days, you get a discount, right? So this to really encourage people to pay sooner. Why? Because cash is king, regardless of what anyone says. If you have liquid cash, you have more power to do basically anything, right? Except for illegal activities, don't do that, right? So that is the convention for, if I'm not wrong, there might be an N in there somewhere, but oh no. Okay. Right, so let's go into the actual question. What happens when D pays C, and how do C record it, right? So when D pays C, essentially it just means C received cash from D, right? So how do we record the increase in cash again? Right, you debit cash. By what amount? We established earlier that it's 950 base, right? Times 1 minus 2%. Okay, 1 just means 100%, okay? 100% is equal to 1. So 1 minus 2% is 98%. So 950 times 98% gives you 931. Okay. And then you say, oh yeah, sorry. Oh yeah, D, you don't owe me anything anymore. So you just say, Dorothy, debtor. I'm just gonna ignore the trade. 931, right? Times 0.98. Yeah, 931. Right. So yeah, that is the answer. Right, this is the answer. What else can I say about this? I mean, on C side, it will just be the exact opposite, right? So not much to be said here, right? Sorry, on D side, it's the opposite. Okay, let's go to question E. So one reason why a trade discount is allowed. Okay, so once again, trade discount is promotion for sale, right? It's to encourage sales. So the answer is just to encourage sales. Right. So this is an important and distinguishing factor. Trade discount versus what's that called? Cash discount on payment. Right. First one we've established to promote sales. The second one is to promote payment. Right. This is important to note. Okay. So promote sales, it just means I am giving up a portion of my sales revenue in order to get that sales done, right? In order to have it signed and accepted. The second one is to encourage them, is saying I'm willing to give up a portion of what I would have received to receive it sooner, right? I will pay to receive it sooner. So yeah, and the first one will just be I'll pay to make it happen. So again, maybe I'll write it down. Pay to make sales. Right. Think of it as advertisement, marketing, what not. And this is pay to receive cash sooner. It's a bit counterintuitive, but if you're working out there and you're strapped for cash, right? Usually, okay, say for example, you have an extra item that you're willing to sell, right? And you can't get it sold, or if you're in need of cash, what do? You offer a discount, right? You sell it at a slightly lower price than market value, at whatever the market is selling it, in order to make the sale happen if you're in need of cash, right? So that is what we call a trade discount. Okay? But what if you already made the sale and the guy isn't paying you back, right? Or you need the money soon, and the guy isn't paying you yet, right? You just say, hey, can I offer you, 2%, 5% off whatever payment you should have made to me, just so that I can receive my cash sooner, right? So this is the kind of reasoning people go off of, and this is very common in actual business, right? Um, so hopefully this shed some light on how businesses actually do their operations, right? You can kind of see the logic behind certain decisions, right? If you look on the paper, it's a bit difficult. It's like, oh my, why they just giving up money, right? So hopefully this shed some light on it, right? And hopefully this explanation works for you guys. Um, yeah, today is gonna be a slightly shorter lesson. Uh, if that is okay with you, is it okay? Just you can type in Discord. Let me know if it's enough. It is? Okay. Alright, right. Yeah, just rest your throat, man. Yeah, no worries, no worries. Okay, so yeah, this is where we shall end, right? Once again, thank you for listening, right? I'll see you guys sometime in the future. It'll be next Wednesday. Who am I kidding? I'll be here. Alright. Uh, I'll do my outro, so I'll see you in the other call, I guess. Yep. Bye bye. Okay, and yeah, that is the end of the lesson, right? Um, and well, again, if you have things that you don't understand from what I say, um, I mean, one, you could watch it back, but again, if you don't understand, like just know that it's perfectly fine, right? I'll keep saying this as many times as I do these sort of lessons, right? Not every explanation is for everyone, right? So if you find yourself struggling to understand something, feel free to just drop me a message on, the YouTube comments or in the live chat. Uh, I read those regularly, right? There's also an anonymous form where you can upload your questions and whatnot. Yeah, so 3 channels for now. I might not be able to, monitor that much, that many channels. So I don't plan to, increase the number of ways you can reach me, right? But hopefully this is enough, right? If you find this VOD and you find it, uh, interesting, or you've learned anything from it, then my objectives have been fulfilled. Actually, yeah, all I want is a little bit of knowledge imparted. Maybe you see businesses in a different light. Maybe you see accounting in a different light, right? Um, and if you don't, it's perfectly fine, right? Again, not every subject is for everyone, right? Um, to be honest, I keep this as lighthearted as I can, right? Without touching the, all the nitty gritty stuff, right? And yeah, I will be uploading all these materials and also this VOD, sometime either tonight or tomorrow, right? And other than that, yeah, that is the end of this stream. Very short stream, right? Um, Actually, it works out better, right? Because for your concentration and things like that. Right, so that will be all from me. Right, I'll see you guys on Wednesday. Thank you. Bye bye.